that we're able to speak to Stuart, and I really hope and encourage you all to ask questions for Stuart. Hi, Stuart. Thanks so much for joining us.
Well, it's lovely to see you, William, and lovely to see you, Karen. Thank you for hosting me.
Yeah, no problem. Well, I suppose the first thing to say is who you are, Stuart. Stuart was born and brought up in Edinburgh. Whereabouts, Stuart? Where were you born in Edinburgh?
Just in Gilmerton.
Okay, cool. He's executive director of G30, which is the leading international central bank think tank, whose members include Mark Kearney, Janet Yellen, and Mervyn King. And drawing on decades of experience in central banking and his community's examples of successful central banking and currency management, he wrote this paper in a purely personal capacity to address and plan for the institutional and currency joining ahead of Scotland's independence. So thank you for putting all that effort into the paper. The paper, when I picked up it, the paper says we have the goal of illuminating the architectural elements needed when Scotland and the Scottish people create their own central bank and the various phases that will be part of the transition to a Scottish pound. What I really liked about that was the word when and not if that you had in that statement. To get going, I'd really like to get an overview of the paper. I mean, it's a relatively short paper. I think it's 40 pages, but I'm sure a lot of the audience won't have read it. So would you like to have a stab at that and just really tell us roughly, what's your conclusions and the reasons why you wrote the paper?
Yes, thank you very much. It's a pleasure to be here. And I should emphasize again, of course, as you have done, that this paper is my personal opinion, my personal views. It doesn't reflect the position of the G30 or indeed of its members. So it should be read in that context. The rationale for writing it is, as you say, I felt that we needed to address a gap in the argument about the nationalist position and on the planning for a central bank and a currency, assuming that IndyRef 2 results in independence. That's my opening predicate. I'm not arguing and negotiating the argument with the people who say we should never do it and we should never be independent. I'm placing that aside and I'm saying, from a matter of policy planning, assuming that IndyRef results in independence, what should we do to get from here to there? And part of that is planning and communication and transparency and moving forward in a clear and consistent manner and addressing those questions that, let's be frank, in the run up to 2014, the nationalist position was weak. It didn't properly and credibly address the issue of currency and the central role of a Scottish central bank, if indeed there should be one. And so as a result, people were able to blow holes in it. And it actually weakened the case. So my case is assume that there will be a victory, but plan appropriately. And planning requires clarity about the importance of the central bank, the pathways forward towards your own Scottish currency, and it requires us to treat Scottish people not as idiots, but as sensible people who want to know with some clarity about the direction forward, and what they can anticipate and how they should plan for it. Now, and I believe if you do that for people, if you show them that these are the steps we can take and that this is possible, all other major countries and small countries have done this, have taken these steps as well, that will assuage concerns and enable us to move forward together to a more prosperous, more equitable Scotland, reliant in part on a central bank and a currency that delivers for the population as a whole. So what I did was I divided it into two pieces. My paper is two pieces. And as you said, the first piece is the institutional piece. And why do you want to talk about institutions? That's boring. That's boring. I've seen some of the other conversations around this topic where people poo-poo institutional aspects. Well, my bias as somebody who's worked in and around central banking for decades is no, you've got to get those institutional pieces back right. And when you design something effectively, you set it up, you give it the right foundation, you let it run, then you're getting yourself ready for the next steps towards currency, an independent currency, and so on. So I talk about the necessity of a clear mandate, and I know we will get into that as part of the debate. It's my position that we ought to have a limited mandate for the central bank that should focus on price stability, balanced price stability, that we have to have an independent central bank, because history shows us across the world, If you don't have an independent central bank, if the central bank operates at the whim and the wishes of the government, you end up in a terrible circumstance where the credibility of the central bank is shot to pieces and you get into runaway inflation circumstances. We also need these governance pieces, like how does the bank operate? How long does the governor serve for? How should the governor speak to and react to the parliament, and the accountability there, and also the accountability with the public, and so on and so forth. You take all those institutional pieces together, which are not rocket science because we can see what works and what doesn't work, but you take those pieces together, you construct the central bank with solid, credible leadership, and you essentially build that credibility. It's not instantaneous. If we create a central bank at the moment of independence, which is what some argue for, right, essentially an instantaneous creation over a very short period of time, it will not have credibility. It needs to be established and grow over a period of time, not endlessly, but we need to allow it to have time to get that credibility, and then be ready to flip the switch on the currency. So my first half talks about those institutional aspects, and some people are very interested in that, some people are less interested in that. The second piece of it is about the pathway for the currency. Now, I know my colleagues in the Sustainable Growth Commission and Andrew Wilson have been pushing and thinking about this for a long time. They've done a lot of incredibly important work and laid the groundwork of the types of questions, the types of tests that we should be thinking about in making the transition. I think about those currency pieces in basically 4 buckets. So I think about the no-go camp. That's the unionist camp. They say, don't do it. The end of the world is about to occur. Don't do it. It's impossible. It'll be a disaster. You know, as I said, I set aside the no-go camp. I take the view that this is not a credible argument. That we know that it could be done. The question is, how do you do it with the greatest degree of smoothness and credibility and consistency and prudence and so on. So I set aside the no-go, but then there are the go now camp, and that's the sort of Scottish Reserve camp team who say, look, do it now, have a central bank, quickly move to a new currency. My view is no. The evidence shows that if you move too rapidly without planning it, without creating the credibility of the institution, ensuring that has been established for a short but a reasonable amount of time, you increase the risk to the economy. You increase the risk that when you create a Scots pound, you have a sudden devaluation of the Scots pound because capital flight exits out the door from Edinburgh and Glasgow, and you don't have any reserves, so you can't restrain it, and things get rather difficult very fast, prices rise, and so on and so forth. So that's the go now camp, but they tend to tell you, look, don't worry, just create it now, just go for it. My view is no, you look at history, best to plan for it, be a bit more prudent than that, not rush. And then there's the slow go camp, which is really the Scottish, the Sustainable Growth Commission, which said, well, we're going to have these 6 tests. We're going to see if these 6 tests are passed. And until those 6 tests are passed, and there are many different tests, and some of them are economic, but as William knows, and you know, the audience, some of them are not economic, they're political questions. That if we don't get those 6 tests right, we will not make the transition, and we will just carry on using the pound, basically the sterlingization of the currency of an independent country. I take the view that no, I don't want Scotland to sit in a sort of indefinite period, an undetermined period, using the pound, having no monetary policy independence. When I look at other small advanced economies in the rest of the world, you don't see them operating like that. They have their own currency, they run their own monetary policy, albeit oftentimes to some degree circumscribed by big neighbors, like the pound sterling, right? But they have their own currency. So my argument is not go slow, don't give any identification of a date when you're actually going to execute this plan. My position is no, there's a median between the go now and the go slow. So I call it the go smart plan, and I say, look, set a date, get everything clear to the electorate and to the policymakers that you are making that transition. It's not going to be immediate, but it's not going to be endless. And my argument is that it should be less than 10 years. I don't say precisely when, because I think it's not for me as an academic or a commentator to determine for public policymakers in Edinburgh and elsewhere what they should do in terms of the precise detail of the date. That's not relevant to me. But I'm telling you, it shouldn't take 10 years. It took 10 years for the euro. I think Scottish people are capable of planning faster than 10 years for a small economy, which is relatively simple, and so on and so forth. So I say, set a target, get our plan clear, sell it to the people, and then everything will begin to line up, because once businesses and once the government and once policymakers and consumers and investors understand they've got this period of time and that there are going to be steps taken every year towards that goal on multiple levels, then you achieve the goal. Because we know within our own personal lives, if we set goals but we never say when, oh, I'm going to do this, but I'll never tell you when. No, you just don't do it. You kick it down the line. You probably don't achieve the goal. So that's my case, in essence, is to say, let's set a date. I don't say whether we should go directly to the euro. Some people say we should go directly to the euro. My case is that you should have what's known as a crawling peg, which is you peg your Scots pound to the English pound once you create your currency, and then you adjust it according to a schedule so that you're gradually changing it when economic conditions occur that necessitate a change. And that gives short to medium term predictability, but it protects you against sudden fluctuations where you peg and then you hold the peg and you try and defend the peg, and then the peg breaks and you're into crisis mode. Now, some other people will also say, let's go for a floating currency from the get-go. That's also possible, but I don't make a determination on that front, and I tend to the view that going straight to a floating currency as a new central bank with no reserves or little or no reserves and building our credibility is a little bit too risky, and that the thing to do would be to have a crawling peg, as it's known. So let me stop there, but let me say and reiterate, and this is coming back to what you said earlier, William. I start off with the premise that this will probably happen, so we should plan for it. It's not impossible. We know how to get from here to there. Many other countries have done it. The question is, how do we do it in the most manageable, planned, clear, and transparent way so that everybody has a surety about where we're going? It's not whether we're going to get there, it's how we do it with the greatest confidence and the greatest degree of prudence. So let me stop there.
Thank you very much. That is a good summary. I mean, I would certainly recommend to everyone that they have a look through the paper. It took me about an hour to go through it, making notes. So it's not an incredibly detailed paper from that perspective, but it certainly gives a really clear idea, and it's certainly a really credible argument and perspective. And coming from you, Stuart, gives it that extra element of credibility. So I've got loads of questions. I'm going to try and get through as many of the audience questions as I can. The first one, Stuart, is a kind of two-part question. How long will it take to set up a central bank? I know we'd spoken earlier about trying to get an actual figure, a time from you, and you've said that's not really you don't feel that's really your perspective to give on that. But the question is, how long would it take, practically? And then the second part of that is, when will we get our resources like oil and gas into Holyrood, which I think is a political question that we'll leave aside. But if we got independence tomorrow, how long do you think it would take, realistically, to set up the institutions and the framework to be ready for a central bank?
Well, I think you've got to give it some number of years to set up the bank. You need to staff it with the best people. They've got to have the highest standards of governance and probity and so on and so forth, and with the right structures around them for accountability and transparency to the Scottish people, because after all, that central banks must be accountable to the populace as well as being independent. But once you've created it, it's going to take a number of years. I would say it might take 5 or 6 years to get things running smoothly, where people understand the rhythms of how it works and how the announcements and the analysis, and also importantly the oversight of the financial firms and the markets in Scotland. Because in the first phase, when you've got this sterling phase where you're reliant on sterling, but you haven't yet pulled the trigger and created your own currency, the principal thing that the central bank will be doing will really be twofold. It's going to be reporting on the state of the Scottish economy and opining on what needs to be done. And secondly, it's going to be supervising the firms, the financial firms in Scotland for which it is responsible. And by doing those things credibly over a number of years, you're then going to get that, build that credibility, build that that credibility and that strength of the institution. And we know from research in the IMF and others that once a bank is credible, if it's created that credibility, it actually then can set lower interest rates than it otherwise would, because markets believe that what it says is it's going to do. So that's the sort of interrelationship between credibility and policy, because you create a dynamic that's self-reinforcing. So it's not instantaneous, but it won't take forever. And I think part of that, you set your goal, you set your dates for creation of the currency, and then you move forward from that point. You set up the central bank relatively quickly, and then give it a number of years to establish itself with the markets and with other actors, and gradually build it up like that.
Okay. So no definite amount of years from Stuart for that answer, but a clear understanding of how you would move to that. And certainly, as you said there, less than a decade. I actually had a conversation with Tim Rideout just last week, and he said that having had some kind of correspondence with the European Central Bank, that he thinks it's much more likely that 4 years is actually the time when you would have a central bank ready to go. So,
so that's more in line with what I was. I mean, if you think about, the ECB itself, I mean, it wasn't an instantaneous creation, right? You have to create the institution, you staff it, then you go to the ECU, you establish the what's known as as basically the payments and settlement system. So that's the banks operating amongst themselves. And once you've got that in the place, then the next steps are relatively smooth, because people can rely on them. They know they work. And then you move to adoption of the currency itself, which in any case, of course, is largely electronic now anyway.
Yeah. Great. Loads of questions, so I'm going to try and get through them. Here's the first one, or the second one.
Well, that's a good question.
Can I just point out that we do also podcast this, so it might be an idea to read out the question.
Okay. So that question is.
I'll do that. Yeah. Okay. So pegging the Scottish pound to the English pound, which is dropping like a stone, is that really the right thing to do?
That's a good question. Since most of the trade that Scotland does is with England, you probably want to have that peg for some considerable period of time, because you want to basically maintain the levels in a relatively stable circumstance. And so, yes, you probably have to do that. I don't anticipate that the English pound will continue to collapse, long term. Although there's an argument out there, as you know, about whether or not the English pound is becoming like an emerging economy pound or currency, and we can have that on a separate date. But I think you have to peg in the first instance. I think it's wishful thinking to assume that the Scottish pound, if it was not pegged to the English pound, would somehow rise against the English pound. That's not likely to happen. We have a very high level of government deficit in Scotland. Our fiscal situation is not in order at the moment, and therefore the probability that the Scottish pound might fall vis-a-vis the English pound is a real one. If you floated instead of pegged in the first instance, I would go for pegging, because then we get that surety for business in the early medium term, in the first 4 or 5 years, that they know that they're going to be relatively stable vis-a-vis their principal trading partner, and then you can move to a pegging, as I say, which then keeps the fluctuation to a minimum.
Great.
I was just going to ask at this point, which is related to what you've just said. So pegging initially to the pound, but in the longer term, I was speaking to John Eggleston, who was he was in the Central Bank of Iceland, and he's very much for having a floating currency. Mm-hmm. His view is that a floating currency tells you what's going wrong in your economy. So then you can see from the float what is going wrong and fix it.
I mean, there is some truth to that. You know, you're in a circumstance where the markets will make really harsh judgments, and it forces you to do things that you otherwise wouldn't want to do. And that's the sort of traditional sort of monetarist position, really, which says, you know, you allow the markets to determine everything. However, there's now a position, which is the position of the IMF, has shifted somewhat, and they say, well, yes, you ought to have, generally speaking, sort of crawling pegs or semi sort of floating currencies, but central banks should also retain the ability to essentially put and governments to put capital controls on if they need to, because there may be a circumstance where external events are so severe that there's a sudden flight of capital and it causes terrible disasters, particularly in small countries, because you're especially vulnerable to those types of what's known as sudden stops, where you get big flows in and out and you can't control them. And that's that. And if you're taking the Iceland position, basically you don't do anything when that happens. And so who pays the price? Well, of course, it's going to be your population. So pegging doesn't solve it entirely. It's a sort of median position, which gives you some of the benefits of floating and some degree of greater stability.
Yeah, I'm not sure about how much capital flight would occur. I mean, I'm not really clear on this myself, and you maybe know more than I do about this. But we've had Richard Murphy on the programme as well, and his thinking is that actually most of our capital is held in property, and property can't be moved. So he doesn't envisage a run on capital. Do you have any thoughts on that?
Well, I mean, that it may be that much of Scottish assets are held in housing, but that's a whole separate debate about whether that's a productive use of capital. But if you actually want to drive your economy, that capital has to be invested in real goods, capital goods that increase the productivity of the economy, and you've got to attract those inflows, and you want to increase those inflows. You don't want to get to a circumstance where large investors say, well, you know, let's hypothetical where the government government fiscal situation is so out of whack with the realities of the Scottish economy, and it has a particular problems for whatever reason, and then there's a failure to act on that, and let's say the Scottish Central Bank doesn't act sufficiently aggressively to reassure the markets, and then people exit, and then we're left in a very much worse circumstance. So we could have a whole debate about whether putting money in your house is a good use of capital investment, and we should perhaps leave that aside. But it's a good point.
Yeah, capital flight is definitely something to consider, or also how much capital are you likely to bring in? Because obviously we don't know if that could be the case. It could be the exact opposite of that. And we've got a brilliant question from Lars. There's an allegorical sculpture on top of the old Parkhead Glasgow Savings Bank called "Prudence Strangling Want." Is there a danger of too much prudence killing desire and impetus? That's the job of a central bank, isn't it? Is that not the very definition of it? What's your thoughts on that, Stuart?
Well, that's a very artistic question, which I feel perhaps underqualified to answer. There's always got to be a tension between the requirement for sort of prudence and small c conservatism from the central bank, particularly of a small country that's not a reserve currency. You know, you can't print your way out of this circumstance wherever you're standing at the moment, and so you're going to be criticized as a central banker for being too prudent, being too conservative. Come on, loosen the taps, and so on. But if you mishandle it, if you go in the other direction and appear to lose control of credibility and lose the credibility of the markets, then you're in a really disastrous circumstance. And we've seen that in Argentina. We can see that in Turkey now, with the inflation rate at astronomical levels. And then you create a terrible disaster for the average people when you get a circumstance where the markets don't believe the central bank is credible, that and it can or is willing to control inflation. In fact, we have a circumstance for the first time in 40 years that most major economies are actually grappling with that now. Will the central banks restrain inflation fast enough to make the cost in terms of short-term economic pain the lowest possible? And we'll have to see how that plays out. But that's the essential element of prudence and credibility, because the greatest single support that a central bank can provide for the Scotland and for the more equitable, more prudent, prosperous Scotland is to maintain a degree of price stability, so that working people know their money is not evaporating before their very eyes. That is the key thing. We need to focus on that, and that's what small countries have to do. That's what you see in Sweden and elsewhere. Yeah.
Great. Well, hopefully we'll get to that, because we really need to dive into if central banks, certainly in a small country, actually can control price inflation when they're importing price, when they're importing that inflation. A really good question here from Peter. What do you say to those who claim England would not allow Scotland to retain the pound sterling on independence? And you do cover that in the paper. So thanks, Peter. That's a really good question.
Well, of course, we can use whichever currency we want. Ecuador foolishly adopted the Bitcoin as its currency not long ago, and that was a total disaster. But we can use the pound sterling. In fact, that's Andrew Wilson's position, right? Basically, continued sterlingization of the economy. But the problem with that is we won't have any input on monetary policy. We'll have no control over monetary policy because it will be set in Threadneedle Street. And so the central bank is left with oversight of the financial system and the payment system and so on and so forth, which is important. But we have no input from a policy perspective into the thinking of the central bank in Threadneedle Street. Of course, the reality today in Scotland is that we don't really have much input in that. But at least as a unitary state, the Bank of England needs to consider the economy as a whole, and that includes Scotland. So my answer to the questioner is no, they can't stop you from using the pound. Anyone can use the pound. But if we use the pound over the long term, we're essentially denying our own ability to make marginal adjustments to our monetary policy and approaches that are better for our economy, especially if and when the Scottish economy begins to diverge a bit more from the English economy. One could imagine a circumstance where the English economy, let's say, is performing poorly because of a lack of investment, because of a whole host of factors. And the Scottish economy, which I like to think would be performing better because it's more equitable economy, because it's got prudent oversight and regulation, because it's got a smart, highly educated populace, is doing much better. And so that we want to have the ability to diverge gradually from our big neighbor. And I think that is indeed possible, but not really if you're using the pound over the long term.
Great. And there are issues using the pound in terms of the clearing and the payment system. We still need some kind of tacit agreement, if not a formal currency union with the Bank of England to make this work. So it isn't the case that we can just use this and say, it doesn't
that's
matter.
Absolutely right.
So
that's absolutely right.
There still has to be some form of agreement for that to work.
I would just say just to emphasis, I do say that in the paper, and sometimes our nationalist colleagues will say, "Well, you're acting as if you want to be too close to the Bank of England." Well, they're our big brother monetarily speaking, and we need to be very close with them on payments and clearing, and also on lender of last resort functions, because they're the one that will be overseeing these big banks. And if they get into a crisis, we need to know about that, and we need to be in conversation all the time. And being a close confidant of and cooperative with the Bank of England is not a negative thing. In fact, it's necessary for what we're trying to achieve, as you say, William.
Great. A question from Cameron here, and I think this leads on to a wider question around reserves. But there's a suggestion that the sterling Scots have in their account can be swapped for the new Scots pound. The swap sterling, including the pounds in circulation, can be used for foreign exchange reserves. Is this how you kind of instantly build up foreign reserves? And if not, what position will Scotland's central bank be in terms of foreign reserves? Thanks, Cameron.
Yeah, that's a really good question. There are two possibilities. One is you start out with no reserves, and then you essentially have to gradually build them up and create a cooperative and a positive and prudent environment where you accrue reserves. That's right. It's also possible that as part of the negotiations after IndyRef 2 signals that we're becoming an independent country, that there would be a negotiation uh, over the Bank of England giving a proportionate amount of the reserves that they currently hold to Scotland. And then we would probably also have to take a proportionate amount of the debt that they also hold. So that's another way of generating the reserves, but they're not going to be instant. And that's another reason why I argue for a sort of a median position and say, look, let's move prudently, but deliberatively, but not immediately, because in the first instance we will have an institution that's kind of lacking credibility, and our reserves will either be zero or very low.
Sure. Can I just ask that question again, though, because it's a very specific question, because, you know, this is my understanding as well, that as soon as we allow people to change their sterling into Scots pound, then we have foreign reserves of X amount of sterling. Is that not your understanding, Stuart?
Yeah, yes, but it's still going to be relatively, it's going to be relatively limited, is my point. We're not Singapore, where we're running a massive current account surplus. And so Singapore is a tiny country with a huge war chest in its central bank, because there's a huge influx of capital all the time. So it's not just that in Singapore, the individuals themselves have a very high savings rate, which they do, but it's that you've got this constant huge inflow of money to Singapore. And so that enables Singapore as a small central bank to do things that we couldn't do in Scotland in the first instance. So that's why I make that determination, or that difference between, let's say, the Singaporean case and our own case. I just don't think we're going to have enough reserves to fight the fight in a floating currency defense of our current currency if we hit a crisis early on. We can see that with much larger countries than us. One of the cases I use in the paper is the case of the Thai baht. And in the start of the 1997 East Asian currency crisis, the baht was pegged to the dollar. The central bank said it would defend the value of the baht, but they then let slip to investors in a private meeting that they didn't have enough reserves, and they felt that they couldn't do it. And then, of course, all of the investors bet on the collapse of the baht and forced it to break with its peg. And that's a much larger economy with much greater reserves than we would have. So I'm not disputing that we would have some reserves at the outset, but they're very modest. It will take some time to build them up. The good thing is that at least from a macro perspective, most of the risk of financial crisis or collapse of individual institutions will be borne by the Bank of England anyway, not us, because the home regulator would be in London, not in Edinburgh.
So, yeah, I mean, if we became independent, there'll be a proportion of people will want to keep using sterling for a while. And those, I would imagine, primarily committed to independence will change to the Scottish pound right away, and they'll change their bank accounts and denominate them in Scottish pounds, so that the sterling that they held before would be our sterling reserves. But on to other currencies. So would you imagine that, for example, the Bank of England would be quite happy to set up swap lines and the European Central Bank? I know that the banks across the world are setting up swap lines so that they can escape predation on their currencies.
Well, I'm not sure that that's why they have swap lines, but they definitely have set them up as a backstop in case of crisis. Yes. So that you don't run out of dollars or pounds or Swiss francs or whatever, because you need to keep those the pipes, as it were, the plumbing of the international financial system running smoothly in crisis. And it strikes me as highly likely that we would be able to participate in a modest degree in those as an independent country. And it would be appropriate. You essentially have the agreement there in the back pocket of the participants, so that if crisis strikes, you still have access to that flow of the foreign currency that you need to keep things from capsizing entirely.
Yeah.
Great. Please let me know. Just drop a Q in front of your comments, just so I can find them, because we've got loads of comments and questions. We've got about 10 minutes left. Okay. I'm going to ask one question. I've got half an hour before doing it. So could you explain how a modern central bank, especially one in a small country, controls price inflation, as this is the mandate you propose for the central bank?
Yes, it is. It is a real struggle. And it's of course, if you're right next to your largest partner, it makes it harder. But of course, you're going to once you become fully functioning and you have control over your monetary policy, then you would use interest rates to basically depress or encourage demand. You would have to increase interest rates as needed where we saw inflation running out of control. You would also have, importantly, a series of regulatory levers that help you too. So an example of that is in the Israeli case where, and this has also happened in Hong Kong and Singapore too, where house prices started to go out of whack. They were increasing far too fast. And this was damaging to the economy because it was, of course, siphoning money out of the real economy into these assets, and it was also sort of making it hard for people to buy houses, and it was heating the economy up as well. So what did the Israeli central bank governor then, Stan Fisher, do? He increased the loan to value ratio. So he said, loan to deposit ratio. So he said, well, in order to cool it down, I will change that ratio. In other words, make it less easy to get over leveraged. And in doing so, it wasn't a popular thing. He was very unpopular for doing it.
And was he head of the central bank?
He was the head of the central bank, but by doing that, he cooled the housing economy before it blew up his small economy. The reason why I use that example is it's one of those things that is difficult to do, but it's what you want your central banker to do, which is when evidence of overheating starts, they need to get ahead of it. They don't wait until it's blindingly obvious the situation is beyond control. And this is the problem we're sitting with at the moment in many economies. It's getting ahead of it and saying, I anticipate things are really getting too hot. Let me cool it down now. In the Israeli case, they were able to do that. It smoothed the economy situation out, and they then didn't suffer from a housing boom bust cycle that we've seen in other countries. So that's an example. So there are multiple ways that we can get to some of that price restraint. I agree. It's perhaps harder for smaller countries, but it is still doable. I see it. I see other instances elsewhere in the world where it's done effectively by careful management of the central bank, and of course by prudent actions by the fiscal authorities as well.
Yeah, we have to be realistic, that it's not just one thing that's going to solve the problem of inflation. There are lots of other things, and I think central banks can be pushed down a route where they're told to fix things, and what they do is lift interest rates, and often it doesn't solve that. I've got a figure from Cameron, Stuart, which I think you might like to see. So Warren Mosler and Richard, that's maybe MASH, is maybe not MASH. That might be Murphy. I think the first year the equivalent of 75% of GDP would be swapped for new currency. So we're talking around 60 billion in terms of currency. So that's a figure from, I'm sure you know who Warren Mosler is. So I think there is an alternative view to the foreign exchange and how to get that to reserves. So thanks again, Cameron, for that. Kieran, do you want to ask another question? We've got a few more minutes before we have to head off.
Yeah, I want to go back to one of the first things you said, actually, and it was about central bank independence and of course having the right people in the central bank to make it credible. You're going to have to get the right staff, of course. But the other point of view that I wanted to bring to your attention as well is I've listened to Paul Tucker and Claudia Sam talk about this, in that central bankers, to a certain extent, politicians are expecting the central bank to solve fiscal problems. So obviously, the government does have to spend money, and that has to happen. And there's a fine balance between, I think fundamentally at the heart of it, your central bankers are civil servants, and really your politicians should be listening to the civil servants very closely and listen to their expertise. And I'm in that situation now every day, where I'm coming in from a political point of view, but there are people that are in the government and operating the government machinery all the time. So what are your thoughts about that?
Well, I agree. And before the pandemic, the oft stated and relatively correct point from the central bankers was, hold on a second. The fiscal authorities in most countries are not doing what's necessary to address the economic ills in those countries, whether it's structural adjustment, so-called, or investment in education and all these other things that have to be done and must be the premise, the role of government, not the role of central banks. You're not doing that, and then you come to me every 6 months or more often than that and say to the central bankers, fix it for me. But central bankers can't do that. They should be aiming at relative price stability, at making sure that markets are calm and so on and so forth, to create the underpinnings for sustained growth over the long haul. They cannot substitute for government. Now, the paradox, and it's a good paradox, is that in response to the pandemic, all the governments suddenly realized, hold on a second, central banks can't solve for this. And so they suddenly started pulling the fiscal levers. And it was very effective in many cases, right? I mean, the furlough schemes that we saw in Britain and in France and other types of mechanisms and huge payments in America stopped us from going into another great recession, the likes of which we hadn't seen in 70 or 80 years. So that's an example of the change in mindset, I think, from the fiscal side, Kieran, is that, yeah, it was right. They used to ask the central banks to do everything. Now we're back in a slightly better circumstance where the fiscal authorities and the governments realize, actually, we have a lot of levers at our control. The central banks can do some of it. Now the central banks have the unenviable circumstance where they have to focus maybe on causing a short-term recession to stop inflation from getting out of control. That's their job.
Stuart,
the fiscal piece is the government's job.
So last question. How much does this differ from the Sustainable Growth Commission's suggestion? Well, I'll leave that. Your paper, how does it differ from what the Sustainable Growth Commission? We've got about a minute for that answer. Thanks, Hashby, for that question.
Thank you. It is a slight. It's a proposed difference in that we ought to be clear about the actual pathway from here to our own currency. Let's not leave it indeterminate. Let's not pretend that it's up. There are all these goals and we're not sure and we can't say. That is not being frank with the voters. Make it clear to the voters that we're headed down this pathway, that it's not going to be a disaster, that it actually will set the grounds for a more prosperous Scotland, and that we have a timeline and we can follow it successfully upon independence.
Great. Thank you very much. Okay, well, a couple of things before we go. The first thing to say is that luckily we've got Stuart for another 15 minutes and we're going to speak to him and we're going to upload that extra 15 minutes to our Patreon. So anyone who subscribes to that will get an extra 15 minutes. What I'd also like the audience to do is, if you want us to invite Stuart back on again, then please in the comments below says yes. Could we have some more time? Because we only really scratched the surface of this, and I've got 15 questions. Kieran said she's got about the same. I did get through most of the questions, so thanks very much for your time, Stuart. Please do, if you want us to speak to Stuart again, let us know in the comments below.
It's a pleasure.
I'll see in about 30 seconds with some more challenging questions. But thanks everyone for joining us tonight, and we'll see you next week.
Thank you.
Good night.